Right, so here we have a trade that's already quite far advanced, even though it was taken pretty recently. But it really is a textbook example of an H4 impulse when conditions are all absolutely perfect. It's on the Swiss yen, and here we can see our selection time frame. So starting with our selection criteria on the daily time frame, we are able to say that we are in a trend, and not only that, but an impulse wave of that trend. For those of you who are using the WM patterns only, you might say that this is not, in fact, a class 1 W pattern. And of course, you'd be right about that. But the fact that we are well outside of this channel and the strong cyclicity, I'm sure, would have not prevented anyone from getting into these trades. All right, so that's the selection time frame. Let's drop down quickly to our execution time frame on H4. And as you can see, that if you were using standard targeting, in fact, you would have already hit the take profit on this. We're using advanced targeting on this particular one. So ignoring the fact that we've already had a trade on this, which went to take profit also very quickly. This morning, we had another setup where we had the pullback, and this is a valid pullback where we have achieved our 3 points. So not only that, but we've also got that impulse candle, which means that at the open of the next candle, we were able to go long. Now, obviously, the first thing you need to do is evaluate where your stop needs to be. And of course, the stop in this case is below the fractal low. And that stop distance is less than the ATR requirement. So our minimum reward to risk ratio conditions are met here. Went long there. We still had the stop in the original position, as you can see. And if you use standard targeting, this take profit would actually have already been hit. For those of you folks who are using advanced targeting, you'll be aware that as soon as this candle, if this candle does close with another higher close, we'll be trailing our stop to below the low of the third last candle. So using the 3-6 trailing stop rule. And obviously position sizing as well in terms of your money management. This trade was taken using our trade manager, but simply risking the right percentage of your account and working that out if you'd done that using either the trade manager, which would do it for you, or if you were using the position sizing tool that we've got for you, you would have been able to make sure that your position size is absolutely right. So just a quick one, as you can see, the market conditions are really absolutely styling at the moment for our yen crosses. So this isn't the only one that we're in, but it really is a very good example. All right, so any questions, drop those in below.